Hey, what's happening YouTube? Corey Smith here, CoreFX, bringing you another weekly pre-week market analysis video through T3 Live here. I appreciate you guys tuning in to watch these. Thank you for the support. I hope you guys get a lot out of these. I've been making these every Sunday for a few months now. Pretty much what I do is I go over the top performing and underperforming foreign currency pairs of the past week. I go over what happened in the news, what's going on the charts, and then I go over what to look for next week as far as the news events and some technical setups that we've got going on. It takes a lot of time to make these videos, so I really hope you guys are getting something out of them. Leave me some feedback on here if you would like. If there's anything you want covered or you do or don't like about the videos or any feedback at all, feel free to leave it on here. Reach out to me, Corey at corefxtrading.com. Make sure you subscribe to T3 Live's trading platform. They've got a ton of great content across the board with the financial markets, not just foreign currencies, but equities as well, and a lot of great content. So make sure you check their page out and like and subscribe them. I'm going to go ahead and jump into it here. Today is January 21st, 2018. We're coming up on the last week, full week of trading in January. January is always a pretty good month. The first quarter of the year is always a really good trading quarter. There's a lot of new money in the markets. There's a lot of strong moves. We get a lot of stuff going on in the first quarter that really makes it great trading opportunities in the FX markets. And last week we had a holiday on Monday, so it wasn't a full week, but this week we have a pretty loaded week with events. Looks like it's going to be a good trading week. Hopefully we can take advantage of some of these events or know when to step away from the markets and be on the sidelines to not get the volatility stopping you out of trades. But I'm going to go ahead and jump into last week here, guys. Overall performance, we had the Aussie, Pound, Swiss franc as the top three performers. As you can see, we didn't even get full percentage moves, so it wasn't that volatile of a week. We had some strong moves, but there wasn't much follow through. We had a lot of false breaks and choppiness happening this week. Not the best trading week this week, but hopefully next week will be better. We have some events going on. We've got some government shutdown in the United States, which can cause some complications. We have some central bank meetings next week. So next week we should see a lot more movement than this. But this week all in all was still decent movers. As you can see, the CAD, dollar, euro were the bottom three performers. Dollar's continuing to get crushed. The CAD was a weaker performer, even though we have a Canadian hike to their interest rates. Central Bank of Canada hiked rates. So we're seeing bearish price action even with bullish fundamental news. So that is a pretty strong sign that we can expect some continued weakness out of the CAD. If good news isn't pulling it higher, then this could be a good indicator that there's more sellers in the market and price is most likely going to continue lower if good news isn't boosting it. So we'll keep an eye on this to start the week. We'll see if we can ride on some of this continued momentum into next week and see what we've got going on. First, I'm going to start going over each individual currencies pair on the technical charts. As you guys can see here, US dollar formed this head and shoulders pattern that we've been covering here, respecting this daily trend line. It broke out and came back to retest, and I told you guys this was a nice area to expect the dollar to continue to the downside, and that is exactly what it did. This week, we pretty much just stayed in this range. The dollar's bouncing around above 90.50, not being able to pass 90. As you can see, we made our one-to-one move of the head and shoulders pattern, so that target was hit. So now we'll have to wait and see where price wants to go. I still think it can go lower. If you see here how we got this target, you take the size of the pattern and drop it onto the breakout, and you can see we did it exactly what the pattern showed us. So this was a really great formation of this head and shoulders, and it filled out perfectly with the strong week of sell-offs from the dollar. I do expect the dollar to continue lower, but until we get a break of this consolidation, we could have it pull up higher and maybe come back to retest 91.50 or 92 even up here with this prior swing, but we'll have to wait and see. I think we stay trading below 92, especially this week. But the government shutdown could apply some pressure to the dollar, but we'll have to wait and see. The euro As we've seen, it's been in a nice uptrend, setting higher highs and higher lows. We broke out even higher this past week and have pretty much traded sideways since then. As you can see, we got a little bit of a bull flag pattern here. But I think price is a little overextended. I could see the euro, as we predicted last week, the last video, I could see it pulling back to this nice area at 116.50. Giving a little retest before being ready to continue higher. Maybe we come up here and set a new higher low. Price could just trade sideways or even continue higher without looking back, but I would expect a little bit of a reversion to the mean, a little bit of a correction here before continuing higher with the euro. Pound, kind of a similar story. Sorry, this is the yen. I'll do the pound real quick. Pound, we have kind of similar story. So we had it break out. I thought we would have gotten a little bit more of a pullback this week, but this week it continued higher. You can see we tapped this strong weekly resistance overhead, and that this sellers came in the market and rejected it. As you can see with this long upper wick to the candle, that price was unable to pass the rest of the week. Then we have two very small bodied indecision candles. Not much movement going on. People are kind of trying to determine which direction the pound's going to go into. Not much money's been flowing into it. So I think we could get a little bit of a retracement here as well. I don't know if we'll come all the way back down to 132.50 range down here, but we might get some kind of a retracement in here before it continues higher. But I do think ultimately the pound will continue higher. The yen broke out of this range and did pull back a little like I had thought, and it's kind of just been moving sideways. Haven't really been getting much follow through like I told you guys, and this week you can kind of tell with these charts that there's just choppy moves throughout this past week that happened. So we'll have to wait and see if we get some continuation to the upside here from the yen, as we did break out to a new higher high, pull back a little for somewhat of a higher low, and now we could continue back up to maybe this 87.50 target up here. Canadian dollar, as you guys can see with the rate statement this past week, this huge wick candle, as you can see, the Canadian dollar whipsawed pretty hard off of this announcement. It wasn't the best trading environment at all whatsoever. We had a lot of trades triggered in either direction, stopping people out, and it just wasn't the nicest trading setup. But as you can see, there was a lot of volatility around the CAD, and we are still in this high base pattern here. So we've got a little bit of a bull flag or pennant pattern you can call right here, as the Canadian dollar is still stalling. We'll have to wait and see if it is going to continue higher this week. I think we have a new higher high in for this week, technically, but fundamentally, again, I was telling you guys how the Canadian dollar is underperforming even with good news. So fundamentally, I don't see the CAD being strong this week. I think we could pull back a little more or stay in this range, but technically, this is a high basing pattern, and a breakout is most likely from a technical basis. However, fundamentally is not backing it, so I'm really not going to be looking to trade much of the CAD to start this week, as I'm just not getting a clear picture that's agreeing with both technicals and fundamentals. I like to combine the technical analysis with the fundamental so that we have agreement, but we are just not getting that this week. We're seeing a technical setup showing us that price wants to break higher, and then we are getting fundamental price action off of news events that's telling us that there's not much strength in the CAD. So we'll have to wait and see how the CAD performs. But all in all, technically we're looking good. Fundamentally we're not. Swiss franc, another one we had set higher highs, pulled back for a higher low, and then this week we blew even higher, setting this higher high as we had expected. Now price is, the second half of last week, price kind of consolidated, but you can see this candle here I'm not liking very much. To the upside, at least, you see we have a nice shooting star candle with a very long upper wick. We have another indecision type candle with an upper wick, and then a nice bearish engulfing both of these prior two candles, and showing that we could be in for a correction this week with the Swiss franc. So we'll keep an eye on this pair. I think the Swiss franc might start off the week a little bit weaker, but if we get a nice pullback to around this resistance turn support area, I think we could continue this uptrend. Australian dollar just set a higher high. I was expecting it to pull back a little bit more last week, but it just continued higher, and now we have the 50 SMA crossing over the 200 soon if this price action continues. The 20 is now straight upward, crossed both 50 and 200, and price is pretty extended right now. As you can see, this is really, we had a false breakout of this support back in early December, and then price since then has just been ripping higher with barely any pullbacks along the way, and we're just having explosive moves to the upside. So Australian dollar's got a lot of momentum up, but I do think we have to pull back a little bit here before we continue higher. New Zealand dollar, again, same kind of looking chart. We had this inverse triple bottom, head and shoulders. Price has just been ripping higher since then, trading under this 73 area. As you can see, price is struggling to break it. Could get a little bit of a correction this week. This 72 is a nice support zone. Maybe it pulls back to there and then bounces and continues higher off of that. That takes care of the charts. Now moving on to the news last week and then the following week. On Sunday we didn't have anything last week, and then Monday was Martin Luther King Jr. Day in the U.S., so U.S. banks were closed. Not much trading going on Monday. Europe and the rest of the world was still open, but the U.S. being closed does take a lot of liquidity out of the market, so it wasn't trading on Monday. New Zealand dollar had their business confidence report, and it was a very pessimistic reading, not very good reading. Came in negative 12. Anything below zero, anything negative is pessimistic. So it's a negative reading. So this was the worst reading in 2 years. Basically just shows that the businesses aren't very confident with the future of New Zealand's economy in the near term. So this could have a very big implication on how the businesses act. If businesses don't have a good outlook on the economy, they're less likely to hire new employees, make investments into new products, into new equipment, new warehouses, new locations. So this could be a leading indicator to let us know that the New Zealand economy could be slowing down a little. Could see that impact in New Zealand, but we'll have to wait and see moving forward. Tuesday we had the CPI out of the pound. That's going to be our consumer price index, inflation numbers. It was right on par with expectations of 3%. Still a solid number, nothing really new or different. So not really going to expect much change out of the Bank of England because this is on par with expectations. So usually when we have news on par, there's not too much going on. Then we had the Swiss franc. Chairman Jordan was speaking. He did mention some things. Some of his verbiage saw some strength come into the Swiss franc. They want to weaken it a little bit. So they're trying to talk it down, but it's not really working. The opposite's kind of happening. So we did see some temporary strength in the Swiss franc. Off of that, Wednesday we had CPI out of Europe as expected at 1.4%. No crazy moves or anything off it, but we're still getting weak inflation numbers. We're still not getting that inflation start picking up in Europe like they need to see. Everything else in Europe is doing really well economically and data-wise, but the CPI needs to pick up, or we're not really going to see any tightening of monetary policy, any rate hikes out of European Central Bank until we see this pick up. Then we had one of the big events of the week, Bank of Canada's monetary policy statement. I didn't think they were going to hike rates this meeting. The markets did, and they did hike rates. And we saw some choppy price action. They hiked it up to 1.25%. CAD is extremely volatile on it. There's about 100 pip whipsaw in either direction. And we really saw some bearish price action the rest of the week. This is a perfect example of buy the rumor, sell the news. The market was expecting the CAD to be... The market did have an expectation of CAD being hiked in their rates, the Bank of Canada hiking their rates. So the Canadian dollar was strong leading into the event. And for the past couple of weeks, as this was anticipated, it priced into the markets. And then when the Bank of Canada actually did hike rates, we saw a little bit of a sell-off because this was a perfect example of buy the rumor, sell the news. Strong data out of Canada is likely going to lead to further tightening and rate hiking this year. So we'll have to keep an eye on their data. They are going to remain cautious, though, not to enter any aggressive rate hiking cycle until the important unknowns surrounding NAFTA negotiations and all are cleared out. So they're going to remain data dependent, which means any data coming out of Canada is going to really be important and influential on price, as we will have to continue to watch. Australian dollar then had their employment report. Mixed bag here with this report, as we didn't see much follow through with the price action either. We had 34,000 jobs created as opposed to 13,000, so that was a great reading. But we had the unemployment rate jump up to 5.5% from 5.4%. So this was another contribution to the choppy week that we had. Just not the best news. I mean, they had a strong reading last report, and this was another strong reading. So it is definitely showing a good job market. However, with that uptick to the unemployment rate, it caused the markets to not fully back a strong Australian dollar. And then Thursday, we had China's GDP numbers, which were great. They beat expectations, making 2017 the first annual acceleration in growth for China in 7 years. So the first full year showing an acceleration in their GDP, in their growth, first time in 7 years. This is pretty big news. This shows the world's second largest economy is growing strong and global economic environment remains strong. This should help boost stock markets, continue this rally. As long as we're getting awesome data like this from all over the world, it's really just going to continue to push everything higher. The U.S. government faces a shutdown on Thursday unless the House and Senate can pass a spending bill. And U.S. equities markets are paying attention. They were trading lower on Thursday. Whenever we see markets paying attention to political events like this, we want to pay attention to them as well in the Forex markets. So we want to keep an eye on the U.S. dollar this week. We could have some volatility surrounding this as the government shutting down can cause some implications in other markets. So we'll have to keep an eye on it. It's really all about investor sentiment, how people are feeling about it. If the markets just shrugged it off and continued to trade as usual amidst this, then that would be one thing. But the government didn't shut down until Friday night. So the markets were all closed, and there really hasn't been any implication yet as to how the markets are going to respond to this. So we'll see here shortly when the market opens, the FX markets, if the dollar is impacted. I think we might see a gap, possibly to the downside, but we'll have to wait and see how it's taken. Then on Friday, we had PPI out of Swiss franc, not a big market mover. They did miss expectations with their producer price index inflation report, but not a very big deal. And then the pound retail sales did miss expectations, showing lower consumer spending than expected. And the pound was slightly weaker off the report, but shrugged it off shortly after. So nothing too crazy going on there. All right, that takes us into this week ahead now, guys. Starting Sunday today, we don't have any news. There's nothing really going on. I don't trade Sundays, especially with no news. Occasionally, I'll trade a Sunday if there's a big event going on in Australia or New Zealand or China, but it's one of those weeks where I'm not trading anything. Until potentially Monday, we have the Bank of Japan's monetary policy statement. So the first meeting of their 8 meetings they have per year. The last meeting was December 20th and was a more dovish meeting, and they struggled with inflation and lowered growth forecast that meeting. However, since that meeting, Japan has had some of the strongest data they've had in years. The Bank of Japan is likely to raise the 2018 growth forecast in this meeting, so they're going to likely raise their outlook on their growth for the year ahead, which could lead to some Japanese yen strength. And this week, their monetary policy agenda is likely to remain the same, though, keeping rates near 0%. However, they are starting to have more of an optimistic outlook on the economy for the first time in a while. So the yen could be a pair to watch this year for sure. Then Tuesday, we have the World Economic Forum meetings, Tuesday and Wednesday. Something to watch for every pair, really. It's meetings in Davos with officials and economists and academics from over 90 countries. So there's a lot going on. There is some drama surrounding the fact that Trump is going to the meeting and he's bringing his America First agenda with him. So we could see some impact on currencies and the global markets. So we want to be mindful of this Tuesday into Wednesday. Both days we want to be aware of this and paying attention. And then the pound average earnings on Wednesday. This is our wage growth numbers, very closely watched right now. Wage growth and inflation are the biggest reports. Wage growth has struggled worldwide, and especially in developed nations. And usually strong moves in the FX markets off these events. So we want to watch this event out of the pound on Wednesday. Then we have CPI out of New Zealand. This is our inflation numbers for consumer price index, closely watched all over the world. Another report that we want to be keeping an eye on and could potentially move the New Zealand dollar pretty strongly, as this is what the the central banks are watching mostly right now is consumer price index readings across the globe. Thursday, we have the big European Central Bank rate statement, which typically they've been leaving their rates unchanged for a long time now at 0%. And the real drama surrounding it comes usually with Mario Draghi speaking at the ECB press conference about their decision. Last meeting was in December, and they left rates unchanged as expected, as they are likely to do this meeting as well. The Eurozones continue to show very strong economic conditions, and we'll look to see what Mario Draghi says about quantitative easing. Until inflation picks up to their 2% target, as we can see, it's coming in around 1.5 still. It's hard to say if quantitative easing will end and rate hiking begin. However, a December 2018 rate hike is on the table for the ECB for the first time since 2011. So that's a long time where the markets haven't even had a rate hike as being possible. And it is the end of the year is looking like it could be possible. European Central Bank has also been signaling an increased chance in revisiting their monetary policy stance this meeting in early 2018. So definitely something to watch for. The press conference after the rate statement is the most important thing to watch, but we will be keeping an eye on them both as we could see some strong trading opportunities. Taking us to Friday, we have GDP out of the Great Britain and the U.S. It's the first reading out of the pound. It is the preliminary reading of GDP, so it's the first of 3 reports. This is usually the most volatile, as it is the first reading. It shows the overall growth of the economy. Big trading event, beat expectations last quarter, so we'll see if they continue to grow strong, even with Brexit looming. CAD, CPI, inflation reading, as we just got the rate hike from the Bank of Canada. This is definitely going to be a huge report to watch to see if they are going to continue hiking rates or pull back a little bit and hold off. And they're very data dependent right now, so this is definitely a strong event. And then again, the U.S. GDP, the advanced GDP, is the first of 3 readings out of the U.S. Beat last 2 expectations, hitting 3% last reading. Very strong, good trading event, and has a big impact on the Fed and their rate decisions as well as the economy as a whole. So this is certainly something to keep an eye on here and something we want to be watching. And then Friday, we also have Bank of England and Bank of Japan central bankers speaking, so definitely keep an eye on that as well, as that can cause some volatility. The World Economic Forum is actually all week, these meetings. I thought it was only 2 days, but it's actually all week long from Tuesday to Friday, so we're going to want to be watching that closely as it could impact the trading week here. But that pretty much covers next week, guys. Keep an eye on the government shutdown in the U.S. Keep an eye on these annual meetings, the World Economic Forum, and then we have some central bank meetings as well as some inflation and jobs readings. So definitely a pretty loaded week. There's a lot of geopolitical risk going on in the markets too, so there could be a lot surrounding that. And really just be mindful of what's going on with the news events. Stick to your trading plan. Stick to your rules. And make sure you use proper risk management with all your trades. And I appreciate you guys watching these videos and staying tuned. Please throw a follow, throw a subscribe, and a like. Core.fx, my Instagram. CoreFXTrading.com is my website. T3 Live's got their content here that they let me broadcast through. Some great content on there. Make sure you check out their page. Subscribe to them as well. And I really appreciate it, guys. I will catch you in the next video covering the charts with technical analysis.